Okay. So bend to bend of the Bollinger Band. First of all, a few words about the Bollinger Band. Many traders say and believe and think that Bollinger Band is not necessary tool for Forex. They think that Bollinger Bands is a good tool for options, for CFDs, contracts, and not for Forex, not for spot market. Honestly, I have no idea why. The best of my entries and the best of my trades. Yes, it's recorded. Yes. Thank you, Andres. The best of my trades and my spots, many of them are based to the Bollinger Bands. So I don't know why they believe so, because from my point of view, Bollinger Band is one of the best tools, best technical tools ever was created. So yes, you did, Dave. So why? I will explain why. Because Bollinger Band is a moving average, a 20 moving average, with two shifts up and down, right? Which create a beautiful tunnel. A price moves on its natural. They are moving inside a channel. And if the prices run away from a channel, most likely they will try to get back into the channel, right? So Bollinger Bands is definitely only visual tool. For those of you who do not trade visual things and don't believe on visual things, you don't need the Bollinger Bands. You will see the same things I explain by your eyes. But visual, it's one of the most important tools. Sorry. So what is the band-to-band move, and how we can enjoy from that? I will split it for two sections. Band-to-band on a wide market condition, and band-to-band on a tight market condition. Okay? I will explain it slowly so you can understand everything I am talking about. I want to enlarge the chart. We have two amazing examples on the OZ dollar just right here. Okay, just right here, this one and this one. Okay? Pay attention for this, friends. Now I want to explain first of all what is the correct band-to-band move and what is not correct band-to-band move. What do you think? First, let me ask you, what do you think? What is the correct band-to-band? What is incorrect? Oh, this cough is killing me. How I'm going to hold a seminar now, I don't know. Friends, what do you think? What is the correct here? Bend to bend? Just try. Don't be scared. Don't be scared. What is first of all, what is bend to bend? Bend to bend, right? That's the bend, right? This is bend to bend, bend to bend, bend to bend, bend to bend. Okay. Now, what do you think? What is more powerful? Okay, let me ask you this question. What is more powerful? This one or this one? Andrew says the first one. This one, Andrew? The left one? Left or right? The left one. Looks more correct to you. Okay. Right, left, right. Okay. The left one. The right one. Okay, it's about, we have like 70-30 to the right. 70% of you say the right, 30 almost right, say the left. From the things I want to explain, the correct one that we will use for our needs is this one, the right one. And I will explain why. Don't get scared and not feel bad because if you did not answer correct. I will explain everything. But the thing is, we are looking for a move from bend to bend, and we want it to be straight without corrections that interrupt the move. Okay, once again, and then I will show you an example by candles so you understand. A straight move that we do not have on the move any significant correction that interrupt the move. Now try to compare, friends. Let me switch this chart, okay, to line chart. Take a look on the line chart how this looks. Pay attention for this. Bam, 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 bam. Corrections all the way. And take a look here. Straight, slow, beautiful down move. Oh, it's not slow, it's fast, right? You understand what I mean? Okay. We want to have a straight move. Without waves, I will explain in a minute on based on candles, okay, so you will see. Okay, we will see many examples, don't worry, okay. Now, why it's important? As I said, when prices go straight forward, from bend to bend, without making any corrections, they are crossing from shift +2 to shift -2, the simple average of the 20. Don't get confused by the mathematics, friend. I just explain you it as a sentence, okay? I will not explain it deeper. You don't need it because it's just a visual tool, okay? So we want to see when prices actually do not respect the 20 EMA. We want to see extreme move from band to band, direct, straight, from one edge to other, okay, and crossing it little more, like it's bend to bend and little more. Why this little more is important, we will see in a minute, okay? So this is the first condition we want to see. Straight move from bend to bend. There was a good question. What is the difference between Bollinger bands and envelopes? Well, honestly, envelopes is a little bit more straight, little bit more correct, but with envelopes it's hard to define rules by visual things. With envelopes it's good for envelopes is like also dynamic channel. Let me put it on the chart so you understand a little bit the difference. Envelopes, let's say, oh, it's a 4-hour chart, so let's say 040 something, no, even more, let's put it like 060. This is the envelopes, you see? Okay, you see that? Let me remove this Bollinger Band, you see? It's also a price tunnel based on moving average, but visually it's difficult to point here some things. That's why Bollinger Band is a very, very good and reliable tool for visual help. Okay, let me enlarge it back. Where were we? Here we go. Okay, Donkin level is different story. About the Donkin I will not explain. Donkin level is totally different story. It's totally different mathematics and different thing. Donkin levels is more for support and resistances. Just a second, please. Sorry. Okay. Uh, no, they are. Let me erase this moving average. This is the band to band. Okay. This is the upper band of the Bollinger. This is the lower band of the Bollinger. I want to see a move from band to band and little bit more. How much little I will explain later. Now, how do I define if I had a corrections or not? Mainly by eyes. Just take a look, friends. This is the best thing I always say. Take a look on your eyes. Is that a significant move, or do we have a significant correction or not? Did the correction interrupt the move or not? Okay, here we can see we have had several corrections, so it's not so good, right? Here we have clear down move without important corrections, right? That's what I think. But just to understand a little bit better, I created something like that. What you see from the right side, let me put spotlight here. You see the spotlight? From the right side, these are correct. Okay? From the left side, this is a correction. Up move and then a correction. And if it continues higher, then it's not correct. Hold a second. I want to show you. Like this. Okay? It is not so correct. Okay? Pay attention. We have had a move, then a correction. This correction broke the last second low. What do I mean by last second low? We have these two candles, right? These are the last candles that created the high. Correct? The last two candles that created the high. Okay? This is the last second low. Correct? This is the last second low here. And it was broken by this correction. And only then the market continues. This is something that interrupts a straight move. Some power, some market power, bulls or bears, were fighting here. And we want to see a clear move without any fight, without any war between the bulls and the bears. Okay? We want to see a straight move, like here, you see? It could happen like this. Small stop and then a continuing. Okay? But it should be straight, without zigzags, yes. Okay? That's very important. The same with the low, of course. Okay, we have a down move. The last two candles that created the down move were here. The second high of these two candles is here, right? This is the second high, the highest high of the last two candles, and it was broken, correct? It was broken. So this is something that it interrupts the move. Okay? Now it also can become like a flat, a correction that becomes flat, something like that, without breaking nothing. Okay, something like that. And then we'll continue up. Still, this is, you agree with me, friends? This is not what makes it straight. This is straight, this is straight. This is not straight, this is not straight. And we are looking for straight moves. Okay? Now, Andrew, about examples, please, a little bit later. Okay? Now, when we have bend-to-bend move, we have two situations. That it happens when the Bollinger Bands are wide, and when it happens when Bollinger Bands are tight. Wide and tight. And now I will explain you something that maybe you did not know. Friends, just before I continue, of course it's not 100% correct. Okay? It's not 100%, but it is very reliable visual tool that combined with divergences, I will talk about that later, gives you the best entries. The best entries. Okay? Now, when we have a wide move like this, Pay attention for the Bollinger Bands, friends. From band to band is something like that, okay? And compare it to this situation. We have had here also band to band, right? Here, band to band. See that? It's also band to band straight, without any corrections. But this is wide, this is tight. Okay? Wide, tight. Now, for some explanation, I will explain it as many times as needed. Please listen carefully. It's important. When the move is bend to bend from wide Bollingers, the prices can stop immediately the price can stop immediately once they reach the opposite band. Okay, I will put the spotlight so it will be easier. The prices can stop immediately when they reach the opposite band, or can go little bit lower. What is little bit lower? Maximum half of the move all the move. This is all the move from here to here. Maximum half of the way down, it's okay. All right. When it is wide, about how to measure if it's wide or not, I don't have tools. I don't have rules. It's just by eyes. This is wide. Okay. This is tight. This is tight. Now it is wide. You see that? It is wide. Just compare it from all the last situation. Okay. This is wide. This is tight. Okay. I don't have some specific rules here. Sorry, but this is what it is. Now, once again, after a wide Bollinger Band, the prices can go straight, maximum like half more of the Bollinger Band. Okay, half of the move more out of the Bollinger Band. When it's tight, and it's breaking out of the Bollinger Band, the prices on 90% of the times will go for duplication one time or two times or even more. Once again, when it's tight and we have straight break from edge to edge, from bend to bend, right? Straight break, on 90% of the times it will make duplication at least one time. What do I mean by at least one time? Let's take a look on some example. Let's take a look. I want to see straight bend to bend, straight bend to bend, straight bend to bend. It's difficult to say straight and double duplication. Here we go. Straight move from bend to bend on tight condition, right? On tight condition, and we have one, and we have two. It'll leave it even little bit more than two. You see? Even a little bit more. But after the two, the thing we are looking for happened. I will explain what is the thing we are looking for in a minute. Okay? Here also, you see? Straight move, bend to bend, then double, well, little bit less than double duplication before the thing we are looking for happened. Okay? See that? That's what I am talking about. Now, once again, we have wide and we have tight. After wide, it can go maximum half of all the move more on the bend. Okay, maximum 50% of all the move, it can continue higher or lower. And for tight, if it breaks straight, it will create a duplication, one or two. Any questions so far before I continue for what are we looking for. Ross asks, so an easier way to put it, a correction would be a green bar. It can be 5 dodges, Ross, and it will become sideways, and it will interrupt the move. That's why I say the most important thing here is to use your eyes. As you know me, friends, I am less I less believe in completely automatic robots, because after all there are several things that you have to see by your eyes. That's why it's visual tool. I don't give you here some mathematical tool like if A happens, B happens, and C happens if D happens. Okay, it's very, very visual. Okay, okay. Meryl asks what time frames it works on. Everywhere, every simple time frame. The higher the time frame, the more reliable it is. Just to make it clear, Meryl, I don't use this tool on 5 minutes, for example. Just between us, okay? I do use it on 1 hour, I do use it on 4 hour, daily definitely. I don't use it on 5 minutes, for example. Okay? Nigel asks, is it better to use the line chart to spot the move? Maybe. Whatever works visually for you. Whatever works visually for you. For me, it works beautiful with the candles. Because I love to see the the colors. I love to see the colors. Okay. Peter asks, what percentage of time do you get more? I don't know, Peter. What percentage of time I get more than double duplication? I don't know. Never checked. Sats asks, you said bend to bend. Yes, bend to bend. This is the bend to bend move. Let me just put the spotlight again. Okay. Bend to bend. Okay. This is the little more. You see? It's riding on the opposite bend. It went from upper bend to lower bend, and now it's riding the lower bend. Little bit riding the lower bend. The maximum it can ride is 50% of this move. What is 50% of this move? This is the whole move, right? This is the whole move. This is the half move, right? This is the half move. The maximum it can go straight is half of this move. This is the maximum. It can go more. It's very, very rare it goes more. It's very, very rare it goes more. But for things we need, and I will explain what do we need and how do we use it, that's what we are looking for. Okay? That's what we are looking for. About examples, friends, please a little bit later, okay? About the question, can we use it on LST? Definitely. As confirmations. Definitely. Definitely. Okay? It stands after the bend. It stands, Philip, exactly. It stands because of the simple reason, the simple rule that when prices are too far and straight far from their natural area, and 20 MA is natural area, they will tend to go back. Very simple rule of the world, of the life. Even on the life, it's the same, right? When we go to travel, for example, when we go to travel and we are out of the house, out of the home, like for a year, it's a long period. For a year, we will look to make some things that will make us feel like at home, like to eat food that we are eating at home, right? To make things that we are making at home with friends. It's natural thing that as far we go from our natural place, the bigger our tend to go back to it. The same with the prices. As far they go from its natural prices, the bigger the possibility they will make the move there. Okay? Alright. again, John, please, about the examples, keep the questions later, okay? Ross asked a visual tool to confirm that kept rather than... for me, it's more visual tool, Ross, like when to enter. Yes, you can use it when to exit, but for me, it's more when to enter, correct? And Bob asks, these moves we can see, these are in the past. We are looking for something after it. No, take a look here. Is that a straight move for Australian? Definitely, right? Definitely, and it's pretty wide. So it could go something like here. 50% from it is something like here, right? Before it makes the stop, correct? The thing is that this happens because of fundamental. It happens because of fundamental things and some bank's intervention. Things like that, as you know, might interrupt the technical analysis. Okay? That's why, for example, all that happens on the euro or franc right now, it's not relevant because it's all fundamental. Okay? So what happened now for an Australian technically should make the stop maximum at 50% of all the move and then make the retrace. Okay, Adrian, that's a good question. What are we looking after it happens? After the bend to bend happens, what we are looking for? That's the next thing I want to talk about. And I have no idea, Nigel, if it works correct with waves, Elliott waves, because I never tested this. Sorry. Okay, so after we spotted the bend to bend move, okay, and remember, if it's bend to bend and it's tight, we are looking for duplication, 1 or 2. Okay, if it's wide, we are looking for a little bit more, or on the same place, or a little bit more. What are the tools that we will use it, and what will we expect? We will look, first of all, on the time frame that it happened. It happened on the 4-hour charts. Beautiful. We are looking at the 4-hour charts. We want to see over, if it's bend to bend from up to down, we want to see oversold here, oversold. How do we spot oversold? Mainly with stochastic. Mainly with stochastic. When it's below this 20, sorry, and it becomes tight, that's an oversold situation. Yes, oversold can be also spotted by RSI if it comes closer to extreme, like 20, 25 area. It's also beautiful oversold. And the thing that we expect will be like that. On 80% of the times, it will make the move directly to the opposite bend. And on rest of the 20% of the times, it will just stop at the 20 MA. Okay. Once again, 80% of the times it will make the move back to the opposite bend, and 20% of the times it will just make the stop on the 20 MA. Okay. Once again, after move happened, okay, we want to spot over sold situation or over both. If it's bend to bend, like here, let's take a look, for example, like here, okay? It's bend to bend move, okay? Straight bend to bend move. It's half tight, half wide, so it could go for maximum for duplication, like it did almost, right? We want to see over both in this case because it went up, right? So stochastic is over both. RSI also is around 75, which is extreme, definitely over both. And from here we are looking for sell opportunities, and we are looking for prices to go the opposite bend. It will go the opposite bend for 80% of the times. For other 20%, it will just make a stop on the 20 MA. How we can enter? We understand what we are looking for. How can we enter? The entry is simple. We have to find divergence. Any kind of divergence, continuing, regular, or even hidden, any kind of divergence, on the same time frame where the bend to bend happened, or one time frame lower. Once again, after we spotted the conditions, the bend to bend move and the overbought / oversold, we are looking for divergence. A divergence can happen on the same time frame that we are working on, or one time frame lower. Not higher, lower. Okay? So for example, let's take a look at this Australian. Okay? Even though it was before news, so it was like a gamble to enter or not, but still I want to explain the technical rule. Okay? Not specific this example, but just the technical rule. We go for 1 hour chart, and what do we have? We have extreme divergence. What is extreme divergence? Right? As we know, new high of the MACD with RSI extreme. Right? New high of the MACD with RSI extreme. We have an extreme divergence, which means it definitely can go lower. Not just that, we also have here bend to bend and almost double duplication, right? Which is extremely beautiful point to make the sell. Okay, just for example, let's see more examples. Let's take a look on the same one I was talking here. Okay, it became oversold here and made the bend to bend. From here we start to look for divergences, right? Let's go for 1 hour chart, because on this we don't have divergence. Let's go for 1 hour chart. Here we go. We went down and we have continuing divergence. With continuing divergence, you see that, friends? With this continuing divergence, we can start our attack. Okay, continuing divergence, we will add more on the next support, right? Based on the investor style rules. And here we go. It went little bit more with the 1 hour beautiful divergence. Then we also got a 4 hour bullish slope, right? And the opposite move to the bend happened. You see? That's the things. That's how it works. Okay? That's how it works. Once again, can it happen that the move will flight like crazy without any retraces? Let's take a look, for example. No. even on gold with all its crazy up move, if you take a look from a bend to bend, you will not see that. You will not see that. After bend to bend, retraces happen. Let's take a look. No, bend to bend close. Bend to bend close it almost immediately. No. Everywhere. Bend to bend, maximum half price higher, and we go down. The prices can ride on the Bollinger Bands, yes, but when it's bend to bend, you will not see these things. Maybe one of 1,000 examples will be extreme move, but this is one of the most reliable tools. And everywhere, friends, with commodities, with indices, with pairs, everywhere. What I do want to ask you before I give you the time for questions, please don't believe me. Please don't believe me. Go back, go to the charts and take a look. Okay? Go to the charts and take a look. Please. Okay? Just watch that. Watch that yourself. Try to see how it works. Try to see how it happens. Okay, how it works. How extremely strong it is. Okay, you can use the simulator, definitely, definitely. Okay, thank you very much, Dave. Okay, now your time for questions, friends. Ross, you were asking about the pound dollar, if I remember correct. On pound dollar, there is nothing happening right now. but if prices go straight, right? The maximum it could go for before the stop is like here, 50% of this move, right? If it goes straight. From here, with a divergence, it will make a return. Okay? We are looking always for retrace to the opposite band. We are looking always for a retrace to the opposite band. No, it does not matter how many candles are between the band to band. The faster the move, the better, but it does not matter. Okay? Yes, Ross. It will be valid if it keeps going. Yes, definitely. Where can you find my template and my MACD? Go to, you know what? Let me show you. Just a second, okay? I want to show you. Go here, friend, to the members area, okay, and go here for the download area. Go to Vladimir's extra. Okay, here you have my template. This is my template, and this is the MACD 2 lines. This is the one. This is the one I use for LSD also. Okay, this is the one I use also for LSD. Just download from here. Put the template in the template folder. Put the MACD into the indicators folder. Okay, and that's all. Okay. Richard asked, riding the Bollinger Bands. Riding the Bollinger Bands is different story. Is a different market condition, and you can find it on Bollinger Band Secrets. It's different story, different conditions, and please watch this webinar. It calls Bollinger Band Secret. You will understand how we can use the ride. Okay. Oh, just go here, right button, and save target as. Save target as. That's all. Okay. Right button on a download, save target as. It will make you the download. Pound Australian, is that a band to band from weekly? That's a good question, friends. What do you think? Is that band to band? From my point of view, definitely. Why not? Do you have any interruption here? Band to band, why not? Definitely. Definitely. It can go, but is it deep or not? That's, from my point of view, it's tight. It's not wide. It's tight. It's not wide. You see what because all the last period is kind of tight, right? This is wide, right? This is wide, right? Now it's like it's tight. And does this red candle interrupt? Well, did it interrupt this important up move? Did it break any low? No, right? It did not break any low. It just went straight forward. Only one candle that stops and it makes forward. Right? This one, Andrew? This is the moving average of the MACD. 2 moving average of the MACD. This is the complete MACD. Complete MACD. It's the default. 26, 12, and 9. Okay? Let's see more question. Sam asks, what lines, Sam? What lines? And Ross asks, the price has start from the other band first. No, it's okay. It started from the lower band to upper band. It's okay. The only thing is it's not wide. So it can even create a duplication first, right? It can even create a duplication first. If it breaks. Right? It's weekly chart, so it's extreme. Okay, it's very long time, but still, technically, that's what it is. Okay, feel that you have to wait for retracement candle to decide. Once again, when it happens, let's take a look at this example. When you have, like here, when you enter, okay, and you come closer to the band, don't be greedy. Don't put your profits, friends, exactly on the band. No need to fight few pips, okay? If you see the market stops like right here, little before it touched, you understand it made the move. Like here, for example, okay? Let's assume that it was a band-to-band move and it made duplication, and you will not fight here, okay? This situation, take the money here because there is a resistance also, right? You don't want to fight it. Once again, don't look to be greedy on the pip. Never. You don't need it. You don't need it. Okay? The stochastic is 833. 833. That's the value. Okay? Yes, I just take them off. Paddle just it will not interrupt. But I don't use them. These two lines, it's 2 and 5. These two lines, actually, that's lines that I learned from Russ Horn. He taught me his thing, what he believes with the moving average and divergences. I don't use it. I have it on my chart. I don't use them. I put it there because it does sound logical for me. I don't use them. It's moving average that Russ used with his things. I personally don't use it. I just have them there. Yes, that's all. Okay, friends. I hope that this webinar helped you. Once again, as I asked, friends, please don't believe me. Okay, I don't want people to believe me because I say it's good. I want you to go and to check, to go and to test. See the power of that. See how we use that. Okay, see how you can enjoy from that. Okay, see how you profit with that, with divergences. Of course, LST is one of that. Of course. Okay, so I hope that you enjoyed from that. I did very much. It was very important for me to share that because we use these tools. You have these tools many times on the live rooms, and many of my trades based on these things. Now a little bit about the next week, the next 10 days. This night I'm flying to Hungary. Tomorrow and on Thursday, Laszlo will be with you on the live rooms. He is going to share his trades. Okay. Yes, I will keep trading. I will be less available on the rooms, friend, because I'm going to hold the seminar. I'll be back on 10th evening. Okay. I will give you, of course, the schedule for the next week. I'm going to hold a seminar there. I will be less available. I will keep the trades mainly investor style, because this way it's much easier to follow. Okay, I will send email about it, of course. For the groups, friends, please listen carefully. For the groups, the LST group and the live trading room group. There are amazing guys there. Dave, Chris, Ross, Marty, all these guys are amazing. They trade LST. They know all my divergences secret. Okay, they have all the divergences secret. Please, please use that. Use their knowledge and use their help if you need. Yes, I'm available by email, of course. Okay, I'm available by email. You can ask me questions, but about trading, you have the best guys there to help. Okay, that's all, friends. Thank you very much. I'll be back. I will be on Skype later. Thank you very much. I will enjoy this seminar. I will enjoy this trip. Thank you for being here, friends, and I wish you beautiful day, beautiful evening, and we'll stay in touch. Thank you very much. Bye for now.